bring on board Anirudh Garg. We've managed to patch that line with him. Anirudh, good morning. Good to have you with us here at Money Control. Anirudh, I want to, firstly bring some light on, there's a note that has come out from UBS on industrials and this whole talk, before the elections, and saying that is going to be a focus area for the government. Infra and Capex themes are going to continue to be the focus area. In fact, UBS says that they expect most of the policy initiatives to continue now that we've seen the dust settle around the whole election and the new NDA government, or the Modi 3.0 government coming to power. Sustained growth momentum, and they say the themes that they are looking at is defense manufacturing as well as electrification. That is something that they are seeing. They also expect about a 19% CAGR on orders as well as an 18% CAGR when it comes to the EBITDA across the coverage for FY24 to FY28. And a continued momentum in urban infra as well as defense mobility is what they're pointing out. They have gone on to pick in a pecking order of CG Power, HAL and ABB among industrials. So this is UBS's picks, but Anirudh, how are you looking at, do you think this is going to continue to, of course, we know that the government's focus is going to be, in the budget as well, that we are going to hear of these themes, but do you think they've got over leveraged at this point, or the valuations rather stretched, or do you think there are a couple of pockets of stock specific actions, or where one could actually see value even within the industrials?
Very good morning, Stacey. Thank you for having me. A quick disclaimer that anything that we talk about today is for education purposes only, and not a recommendation to buy and sell. Please consult your financial advisor. Okay, yes, Stacey, the UBS report is very interesting, and we at INVasset have been focusing a lot on what UBS has said for the last 2 years now. We believe that every bull run has some underlying trend which remains intact for the entire run. Maybe it fizzles out a bit in between, but overall, in the long sequential rally, it remains intact. This time, we believe it is Capex. So, a value run which we are currently going through from 2022 is primarily focused, I believe, on two themes. One is Capex and other is interest rate sensitive. So Capex, we are very, very clear. From 2013 to 2020, in the last 10 years of the Modi government, we have seen it rising from 2,50,000 crores or 2,30,000 odd crores to today at 11,11,000 crores. And I believe going forward, against the expectations that we must be going into populist budgets now, where you are running a coalition government, I believe that the government's continued focus on Capex would remain. And with the Capex industry, be it railways, defense, infrastructure, power, and their allied, will see a growth, and that is what UBS has also indicated. Also, in terms of the other theme which a value run plays, I believe that has the interest rate sensitives. So, in terms of interest rate sensitives, you have to have global growth and global inflation under growth. Global inflation under control. Now, global inflation is getting better, but global growth is not returning as expected. So we have to focus on our domestic counterparts. So I think any of those sectors in interest rate sensitives which are domestic focused and are able to pass on increased cost to their clients, something like luxury real estate and stuff, they will be in focus as well.
Propped up there. But let me bring Anirudh back and get a sense. Today we are sitting on a day where we are expecting a lot of macro data, not just from India, where we are waiting for our May CPI number to give us a sense of, where inflation is, that the food inflation continuing to be sticky, and how that is going to play out for the government in the decisions they want to take ahead, and also the RBI when it comes to, rate cuts. But you also have the CPI number in the US as well as the Fed decision that is impending, that we are going to get to hear by later tonight. So given these scenarios, what do you think, no matter what the outcome, how much of that is going to reflect in the Indian market? So do you think it's all priced in, and now we have already factored that maybe a rate cut in the US might come only by September or even later, and like the RBI governor pointed out, that he doesn't necessarily need to follow the Fed, so which means things could change here. And how does that really go on to change for our rate sensitives here in India? What would be your view?
Okay, so I think when it comes to the rate cuts and the inflation tackling, I think Fed is at the very center of everything because it is their money that is circulating throughout the world. So one has to make things very, very clear that whatever the Fed says is absolutely correct, and that is how money flow will flow throughout the world. Back in 2020, when Fed said that, during COVID, when we were all expecting the markets to go down further, Fed said that we are printing money and the markets rebounded from there. Then in 2021, they said that we have an inflation problem and all the interest rate sensitives were in a problem for a year and a half. Now the Fed has clearly mentioned that, okay, we will decide a date for the rate cut, but we do not have that inflation problem anymore. We have handled the inflation problem. We are at the very last, the very last days of the antibiotic course. And going forward, everything seems fine. And the market is totally reflected that. It has totally discounted it. The stock markets have a tendency to discount the future, and they always do. Looking at how the metals are reacting, looking at how the other rate sensitives are reacting, we know that the Fed does not have an inflation problem anymore. Now, rate cut is just an event, like election was, somewhere down in the future. I think rather than waiting for the event, one should look at what the broad senses and what, the sectors which are sensitive to interest rates react. So I believe inflation is totally over and has been over for the last 3 to 6 months now. And when the rate cut would come, whether it will come in September or it will come in December, is just a matter of time. We are bullish on interest rate sensitives going into the future as well, because we believe that the Fed does not have an inflation problem anymore. When it comes to RBI, we believe that as much as the governor would like to say, and I believe he has done a beautiful job. I've never seen such, coordination or a jugalbandi between the RBI and the government for a very, very long period of time, and they have handled it very, very well. We did not have any inflation problem when the Western economies were having. But yes, I believe if we have a rate cut before the Fed does, like much before the Fed does, then we would see a significant impact on the Indian rupee. That is something I'm worried when it comes to, RBI cutting rates before the Fed.
Right. Quickly, Anirudh, since I already asked Rajesh, but the whole housing finance pack or cement or to do with real estate, all of them also seeing some good traction with, the government coming out and announcing extension of their schemes. Do you think there is value more in the real estate as well as if you look at housing finance companies, particularly, where would you be putting your money if you had to?
Okay, so when it comes to real estate, the real estate is very, very fragmented right now. It's divided totally. At the very top of the strata, you have the luxury real estate, something like DLF, something like a Brigade, all these companies that are doing particularly well because, there is a premiumization drive going out throughout the world. Post-COVID, people have come out and started spending on things that matter. Also, the prices of the houses, somewhere between, I would believe, 4 crore to 10 crore range, have started increasing in territories like Gurgaon. They have doubled in the past couple of years. So, people are having that feeling of missing out, and everybody needs to have a house. And if they live in Gurgaon or Delhi NCR, and Bangalore, they leave, they cannot shift their cities. So a lot of buying interest we are seeing from investors, from the users in luxury real estate. So luxury real estate is one sector which is doing particularly well according to us. The second is according to what the Prime Minister has announced, for 3 crores houses to be built up. Now, I think the prime beneficiaries for this would be the housing finance companies, because they have got, simple vanilla growth chances now. And when it comes to the people who are constructing it, all those real estate companies who are constructing it, I believe there is a little bit problem because you are constructing houses which are not luxury, so you are not able to pass on. You won't be able to pass on the increase in metal prices to the customers, very easily. But On the other hand, since you are seeing a lot of inflation, a lot of rise in the prices on the luxury real estate, and overall trend in the real estate market is the prices going up. So that shouldn't be a problem that much. So not very bullish on affordable housing real estate companies, but bullish on the housing finance companies as well.
Interesting. So quite